There are roughly 10 unique life insurance conversations that you'll have with your clients and prospects. This video covers the situation where a client is holding on to a life insurance policy and you as the financial advisor know it's not a good long-term solution, so you're looking to do a 1035 exchange or a replacement. I'm aware that there are advisors and clients alike that are more bottom line oriented, so if you're able to point to a particular part of a life insurance illustration and say, here, this is where this policy falls apart, sign all this stuff, more power to you. This video is for the rest of us, and I'd even argue for the bottom line people. There are so many more benefits that you'll get by just taking a few extra minutes to show your clients how the policy falls apart rather than simply stating that it does. This is the animation screen. How I created this screen was I took a life insurance illustration file in PDF form, placed it on the client manager, and now all the data has been transposed to this kind of visual. This is an animation or a video, so it has a little player bar below. You control the playback speed based on your client and the conversation, how it's going. Let's zoom out for a moment. The horizontal line on the bottom, that is the lifespan of the client or the timeline, age 54, goes all the way out to age 120. We're going to zoom back in and see these policies a little more clearly. This is the same policy, just showing its three projections: guaranteed, mid, and current projections. The first value is always the death benefit, and that dictates the circumference of the circle, the life insurance policy. The second value is always the cash value, and that's the blue growing inside the death benefit circle, looking to fill it up, hopefully. So let's play this at half speed. Press play. We're at age 54, and I'm actually going to pause it here on the premiums. These are the annual premiums. Again, Mr. or Mrs. Client, we know we're not paying over $15,000 a year in annual premiums. This is the same policy, three different projections, so we're paying a total of over $5,400 in annual premiums. We'll press play. So this is at half speed. We will fill it up. You'll see that it totaled it down below. You don't have to worry about that for this animation. Now we're at age 55. I'm going to pause it in just a moment, let those premiums go in. And here we are. These are the growth numbers or indicators. And we could see at the guaranteed projection, the DB, death benefit, and CV, cash value, are red. That means they're going down by that dollar amount in this particular year. Down by $9,800 for death benefit, going down by $10,300 for cash value. So the guarantee is already off to a bad start. The mid projections and current projections, they're doing fine. They're holding their own. They're green, so they're going up. Let's press play. Now I'm going to speed this up a little bit. I'm speed viewing this at 3 times the speed. You can do whatever you want. We can see the guaranteed is still, going down both in death benefit and cash value. And I just saw something in the mid, so I'm going to slow things down a little bit here. Let me slow it down. Again, you could pause, go back, whatever you have to do to complement the conversation. There it is. We're at age 60. As per usual, guaranteed projection going down in both categories, death benefit and cash value. And now it looks like the mid projection is sort of infected, if you will. The death benefit going down, cash value increasing, and the current is doing just fine for the time being. In addition, we can pause this and call up a stats card, and this shows real-time stats that are useful. I like to use this as a little timeout to kind of ground things, show them some information. For instance, we could click over here. If you died and we were performing the guarantee and you died at age 60, for every dollar that you put in, your heirs would receive $22 and change back in a death benefit. And obviously the current is doing the best. So we could press play on this and those stats would change in real time. You can see them ticking up and down. But I'm going to get rid of the stats card for the time being. And now what I'm going to do is I'm going to play this a little bit longer. Want to see if I notice anything else. No, looks like things are kind of status quo here. So I'll pause it for a moment, and I'm going to move out to age 70. So I'm going to hit this skip ahead 5-year button. So we'll go from age 63 to age 68, and then I'll hit skip ahead 1 year twice, and now we're at age 70. So I'm going to play these at double speed again. And have I noticed any change? No, everything's pretty much the same. The death benefit is not decreasing anymore. It's staying level on the guarantee. That guaranteed projection, if that's how it performs, we're in trouble. So here we are, we're approaching age 74, and it looks like, yep, that guaranteed policy right up top, if we performed that projection, we would arrive at age 74 with no death benefit. We'd have to go back into underwriting. Maybe we'd get declined. Maybe we wouldn't be cost effective. So we'd have to make these decisions earlier, the current age that we're at now. That's why we're projecting all this. Let's press play and continue forward. I'm going to skip ahead a few years. I'll go another 5 years to age 80, and then I'll play this at double speed or triple speed. What's happening? The mid is going down in both death benefit and cash value, so we can see its descent. It's starting to crash. And I think just around age 90 that takes place. So I've paused it for a moment. I'll move over right here just to age 89. I'll slow down the speed. I'll press play. And here we are. We're at 633,000 in death benefit. Cash value and death benefit both going down. Even in the current projections, the death benefit and cash value are going down. And now if we performed at the second best projection, the mid projection, at age 90, we would be without insurance. And at that point, we probably wouldn't even consider filling out an application. So I'm going to skip ahead here to age 93. And at this point here, we're going to see that the current projection, the best projection of this policy, is going to fall apart. So the best case scenario, we're running out, it seems, at age 94. So what do we want to do about that? There's another feature on here that I'll show you real quick, and that is just a very concise review with the highlight reel. We're just going to put in the ages that are key, and now when we play this back, it will just play those on a loop. So it's just going to show the times, the different ages where the different projections fell apart. So if this is for your practice or you're governing over a group of advisors, you'll notice that I sort of did this in one take. It's not because I'm some great speaker, but this kind of visual calms the client, gives them a unique perspective to pass on to other people and talk about. It's really different. It's a different approach than traditional data visualizations. And this allows me to tell a story more cohesively. So it might do the same for you as a financial advisor or any of the financial advisors you might oversee. It might help them become more confident, more excited to prospect, and that could help retention as well. However, if you have any suggestions or you have any questions, I'm always here. You can answer them. In the next video, what I'll do is I'll show the solution, because now that we've really inspected the problem, it's going to lift up the next animation, which will be the solution, that much more. I hope you enjoyed this video. Good luck at your next meeting.